G'day, it's Aussie Dollar Man. Welcome to the Forex Form Guide for Sunday the 16th of March. In this episode, we're going to be taking a look at the Aussie dollar, US dollar, the pound US dollar, euro US dollar, and US dollar yen. Firstly, discussing what happened last week, and secondly, having a look at what may be in store for the week ahead. Before I get into things though, a quick disclaimer, this video is for educational and informational purposes only and shouldn't be considered as financial investment or trading advice. The presenter does not provide recommendations or guarantees regarding market outcomes, and no liability will be accepted for any losses resulting from trading decisions based on the concepts or dates discussed. All market commentary is simply my interpretation of Gann's work, particularly the tunnel through the air, and these insights are shared to illustrate historical market principles, not as actionable trading signals. Bottom line, do your own research and trade responsibly. As we go through these markets, I'm going to be looking at them through the lens of form reading and also forecasting. If you're interested in learning the mechanics behind form reading, you can check those out in Gann's book, How to Make Profits in Commodities, or where I learned it from as a student at Safety in the Markets Active Trader Program. For forecasting, I use cycles from W.D. Gann's book, The Tunnel Through the Air. They are coded in there. They're not easy to find, but you can get started by listening to the audiobook of Tunnel Through the Air that I recorded for this channel. So let's kick it off with the Aussie dollar, US dollar. You can see it was a very, very quiet week. Only 75 ticks of range from the bottom of the week to the top of the week. A tiny week. You can see it was an inside week here, which means that all of the data for this week is contained within the price bar for last week. So very, very tiny. Not much going on there. I was expecting a top either on the 8th or the 13th of March. Well, funnily enough, we got both of those. We've got the 8th and we've got the 13th of March as little swing tops there. It remains to be seen what the Aussie is going to do. Looking at this, it certainly doesn't look like it wants to head down just yet at this point in time. It is holding this 50% level quite nicely. However, I think we'll see Monday or by the latest Tuesday, we're either going to break above this trend line and kick off to the upside, or we're going to break down and the downside move will begin. And if that's the case, it means that this low in February up to the March high, that's our whole monthly swing. And if we turn down from there, we've got a new monthly swing to the downside following a very weak retracement to the upside. And that would be quite bearish for the Australian dollar, given that we have already taken out a whole bunch of major lows from the last couple of years. Looking at the weekly chart, we retraced 37.5% or 3/8 of that whole monthly run down in just 2.5 weeks. So I was expecting that to go a little bit further to the upside. In fact, last week, while I was expecting a top, I thought we'd be making a top higher than this high over here. So I've got that one wrong. As you can see here, we've had a run down, a weak run up, and then a week of sideways. Not much going on there. I think the market will run down from here. In fact, I did actually get short at 63.24 on Thursday, and the market started running down, and I thought that was it. I was in my top for the 13th of March, and we were going to run down from there. However, we have actually run up quite strongly from there. About the same length as the last run up there on a swing chart, but it does look like at this point that we are going a little bit higher. And if we do go higher on Monday, I'd say that there's more upside on that weekly swing, particularly if we break that last week's high, which wouldn't take much to do. If we look at this on a daily next to a 4-hour chart, which is a common comparison that I like to do, this run up here and run down, you can see over here the run up was basically 2 4-hour swings, 2 equal swings there. Then we had a big 4-hour swing down here, which cleaned out some lows, basically overbalanced that last run down there. And then we've had a retest getting quite near the old top there, and similar sort of range up there. If we stop here and start heading down, that's okay from a swing trading perspective. But to me, it's looking quite messy, and I can see this going either way. I have a bearish bias. I've got a 13 March turning date that I was expecting. It looks like a top. I guess it could be the low there. And next after that is early April. So it'd be a couple of weeks, 2 to 3 weeks into our next run. If we do start heading up, I doubt I'll be able to get what I want, which is a low risk entry into the move. So I'll probably let that go, and I'll come back in early April and tackle the next date there. That's quite common in forecasting. Even when you have the correct cycle, some of the periods of the market are quite tough to trade. And when you get this choppy sideways movement through here, if you're not careful, you can find yourself getting chopped in and out of the trade trying to get set. In this case, I had a short trade on Thursday, ended up taking a small profit from there. The market ran down. I trailed my stop to break even at first, and then a little bit down, and then up it went. So not much to write home about there, but I'm all set to see what happens for next week. On the 1-hour chart, you can see this whole move up here. That is looking quite strong. It's very close to 200% of that first range out there. And again, we may just false break there, but I suspect we'd probably see a pullback And if we see a strong support level there, that's probably the springboard for more upside. In terms of time pressure dates, I'm watching the 22nd and 27th of March and the 4th of April for my smaller cycle dates. And the medium-term cycle dates, I had the 3rd of February, which gave us a nice monthly low, and the 13th of March, which I think is a high, but we'll have to wait a couple of days and just confirm that. So whichever way the market goes this week, I am expecting it to run into around that 7th to the 8th of April period in the market, just in case whether it's heading up or down, and I'll adjust my trading accordingly. And as always, I base my trades not on the forecasts, but on my form reading around the swing charts. Let's move on to the British pound now. You can see the pound has actually retraced fairly strongly. It's reached 62.5% retracement of its monthly downswing, whereas the Australian dollar only retraced 37.5%. So the pound is looking stronger. Like the Aussie, though, it has taken out quite a few monthly lows there, and I do think that the next big move on the pound will be down. Having said that, that 75% milestone, which there is a bit of price pressure there, if we break through there to the upside, well, I'd say those tops are going to be taken out. And given what's going on at the moment, there's a lot of volatility out there around the US dollar, and depending on what happens, whichever way it moves, there's a good chance that it could have a pretty strong run. So again, if we do break above that 75% level, there's every chance we'll take out that top. And if we break out through that top, there's every chance it's going to have a really good run to the upside. Now, if that happens, you've got to ask yourself, what would that mean for America? What would that mean for the US dollar? I'm not a fundamentalist, so I'll leave those discussions for you. Feel free to share those in the comments. I'd love to hear your thoughts there. In terms of the daily chart there, I was expecting a little bit of a pullback. We got a little bit of a pullback. That's the bare minimum that it would take for a little bit of a pullback. It just broke the previous day's low there, not much else. You can see on the 4-hour chart, it was very sideways all week, just like the Australian dollar was. Personally, I think that the pound, if and when it does pull back a little bit, I think it probably will test that 75% retracement, but we'll wait and see there. Moving on to the euro US dollar, you can see that the euro has actually retraced even further than the pound. In fact, it looks like it's hit the 75% milestone. It hasn't. It fell a few ticks short there, but it's very close there. It did hit 200% of its first range out from that low back here, which is an important area to watch. And it has started to come down, and it's giving you a potential first lower top on the daily chart there. Normally, when it comes to these milestones, in my experience, markets don't just stop a few points short. They might pull back a little bit, but then they will go to that level. The euro, as I said in last week's episode of the Forex Form Guide, the euro is looking quite strong through here. And if it doesn't pull back too much, and you look at the 4-hour chart here, it hasn't pulled back too much. If it doesn't pull back too much, it may well go through there and continue on to the upside there. As a trader, you have to have multiple scenarios. In one of the last writings of Gann before his death, the year before his death, which was Auburn Motors, at the end of the lesson, he talks in terms not of the market must go here or must go there, but he says, if the market goes up here, watch this. If the market goes down here, watch this. And as a trader, that's what I'm interested in. Looking at the US dollar yen, it's had a similar sort of week, fairly sideways through there, hovering between the 62.5% and 50% retracement of this run up from September. On the Australian dollar, we had a September high down to our February low. On the US dollar yen, we had a low around that time, running up into a top. We've so far retraced 62.5%. We have put in a lower top on the monthly chart there. So as I discussed last week, this could be quite bearish. It has paused at around the 50% milestone of this run down here. If it continues to the downside, that could be quite a big sell-off for the US dollar. And if that happens, if we do continue down there, there's a very good chance we'll see that reflected in the other majors, Aussie, pound, and euro, going to the upside there. The US dollar yen is a little bit of a wild card, though. You can see US dollar strength here that's not reflected in the other majors. And US dollar strength against the yen is more because the yen is going so terribly rather than the US dollar going strongly there. But generally speaking, if the US dollar starts to sell off heavily against the yen, it's a pretty good chance we'll see it sell off as well against the other currencies as well. Now, at the moment, we've got a low at 62. We ran up to 50%. Whichever way we go from here, I think we'll see a pretty good run. Like I was saying with the pound and the euro, what we have here is if we break above 50% and then sit on 50%, normally that's a good balance point and the market will kick on from there. However, if we turn down from here, that would be treated as a failure to recover that 50% milestone, and I'd see that as very, very bearish. Now, as always, I don't just make a decision based on one time frame swing chart. So I'll break this down using a 4-hour chart over here There's your daily run up and pullback. That all looks okay. There's your 4-hour pullback, a run down, run up, and then a weak run down there. And then this daily swing that you've seen here, just the beginning of it, that's all one 4-hour swing up there. There's a pretty good chance after this pullback ends, whether it ends here or a little bit further down, that you see another run up there. If that happens, it'll probably take out that top, which means it's going to be above 50% there. And if you get a bit of a run there and sit on 50%, that starts to look a lot stronger. If it can't hold above that 50% level though, it could be quite a sell-off. As I said, looking at the monthly chart up here, yeah, there could be quite a run down there. Looking at the economic calendar, we do have retail sales in the US on Monday. And then on Wednesday and Thursday, there's a plethora of data coming out. There's a lot of interest rate announcements across the different major currencies that need to be looked at. And earlier I noted the 22nd of March as my next smaller cycle date. That has an orb of 2 days either side, and that comes in, the 22nd of March is a Saturday. I'd be looking around Thursday, the 20th of March, because there's a whole bunch of stuff coming out. So as you can see here, we've got the Bank of Japan policy rate. This is on Wednesday, the 19th. And then Thursday, the 20th of March, but in the early morning at 5 a.m. Sydney time, you've got the federal funds rate and the FOMC economic projections statement and press conference. The expectations are interest rates will stay the same, but markets and traders will often scrutinize the statement and the press conference, and they just look for a keyword or a phrase, and they'll all go running off in one direction there. But it's not uncommon to see a turning point happen around these times in the market. And as I said, that's Thursday, the 20th of March in the morning. Slightly later in the day on Thursday, you've got the Australian unemployment change figures, unemployment rate. You've got the Swiss bank giving their policy rate, their interest rate. They're expecting a cut in interest rates. You've got the pound official bank rate coming out as well. You've got US unemployment claims on Thursday night. There's a lot there on the 19th and the 20th. The date that I was watching is the 22nd. It's just for a smaller cycle date. It's not for a major turn. But looking at the swing set, wouldn't surprise me to see a top or a bottom put in on that date there based on one of those announcements there. I don't trade the announcements as such, but I do factor that in when I'm looking at a market. And if I'm looking to take an entry, but there's a big announcement coming up, I'm generally cautious to do that because just before an announcement, you can see a bit of a whipsaw up and down to clean a lot of positions out. Normally, I like to see the news come out, bang, and then place the order slightly after that, as long as nothing major has changed. Yes, you do miss a few trades that way, but there's not that many announcements each month that will move a market in a massive way. So I like to be a little bit cautious around those big announcements. So that's all for this week's episode of the Forex Form Guide. If you want more information on form reading, those are the links, and the forecasting you can find in Tunnel Through the Air. Don't expect to go to Tunnel Through the Air and just have everything pop out at you. It takes years to break down unless you can find someone to teach you, and just be wary of that because everyone thinks that they know it all and that they've got it right, but everyone teaches you different things. At the end of the day, what you're looking for is something that works and that is tradable, and that's a start, and then combine that with your form reading work. So that's it for this episode of the Forex Form Guide. A little bit of a shorter one. This is the third time I'm recording it due to tech issues. So you got the short version today, but next week you will get a slightly longer version, and I'll put some of the stuff that I was going to discuss here, which isn't time sensitive, into next week's episode. Until next week, I hope you have a fantastic week. All the best with your trading and with your GAN studies. Bye for now.